All right, welcome to a live trading session and Q&A with Chris here. So this is kind of an unscheduled thing. Reason being is it's my birthday today. And so I got some option positions I got to unwind and that are expiring today. And I got some trades that I'd like to take some profit on and just kind of get them all set up before I take off for the weekend. I'm going camping in a few hours from now. So just want to do some work, and we decided to do a live session today instead of posting a video. Also, coming out on Sunday, we have an interview with a student of Second Skies who is a professional trader. He's been funded, and now he's creating his own prop trading team, basically his prop trading firm. And so we did an interview with him yesterday. We're just doing some edits and getting that ready, and then we'll be publishing that on Sunday. So, I think you guys really like it because it's one thing to relate to me as someone who's been doing this for 20 years, but it's another thing to relate to a student, get to hear student stories who went through the challenges that you went through. And, they've been in it a long time, but, they were a student, very much like you were. And so they're a member of our courses, and, they had some interesting things to say, and their heavy focus on, discipline and chart patterns and price action. And, and he has a very interesting trading style. He trades, about 100 times a day. And that's, so he's short-term scalping. And I thought you guys would find the interview very, very useful. So I think it's going to be a great little, session. And I think you guys will really enjoy it. So, all right. So hello, Christopher. Good to see you as well. Long time. Thank you. Appreciate it. Miss Actor, good to see you as well. Sina, good to hear from you. Matthew as well. Cool. All right. So the way, if you've been to these live sessions, the way they work is the rules are, hello to you, Beishan. Thank you for the happy birthday. Appreciate it. Good to see you. So the way we do this is that we are basically going to spend most of the time going over charts, but we also will do open Q&A. And, neutral positive language only. If you disagree with me, you're totally welcome to. Just make sure you do it with neutral positive language and share data and facts. We prefer data over opinions. And if you want to look at charts, if there's a trade you're in right now or a trade you are looking at, then the rules are very straightforward. You're going to name the instrument. If it's currency pair or stock, give the stock symbol. Basically, you have to list the time frame, and you have to give if you're long or short, you have to state that your entry, stop loss, take profit, and you have to just give 1 to 2 sentence analysis on that. So that's how we do this. Jonathan saying happy birthday. Thank you. I appreciate it. Stefano as well. Yes, it is my birthday today. Yes, thank you. Appreciate it. And Susan as well. Thank you for the happy birthday wishes. Appreciate it. So somehow getting older is I'm realizing very clearly that I'm not in my 20s anymore. And that's become very, very obvious. And my body has decided to let me know. So luckily, I'm starting to get back more into exercising more regularly, doing yoga, and just getting on the bike and things like that, and hiking. So it's my goal is for the next few years to reclaim that 25-year-old body as best as I can, because that was like the sweet spot of really where I wanted to be in terms of physicality. So I want to go over real briefly. I kind of want to go over global markets, what's happening right now. And then I'd like to go over some trades that I'm looking at, that I'm looking to get into, some trades that I am in right now, some trades that we took yesterday and that are in profit right now and doing really, really well. And then, ones I'm looking at, ones I'd like to get into, and so forth. So real quick, let's take a look at markets. ES up 22 points a day. It's pretty much light gains across the US indices after a tough session yesterday. Europe kind of mixed, very, very light on Europe as well. Not like any huge gains or gangbusters or anything like that. And also mixed in Asia. So it's bullish, but slightly tentatively bullish, basically. There's nothing that's just stepping out and saying, yeah, we're totally gangbusters. The S&P 500 is building its price action to want to break his most recent highs here. So here's the most recent highs. It's been in this structure for now, 6 weeks, I think. Yeah, so it's been in this structure for 6 weeks and found really good support at 29.51. And the last 3 weeks has just been pushing. We did have a dip earlier this week, and that has been reclaimed. So it's really pressing up against this. And I think once it does that, then I think you're pretty much heading towards 33.25, and then the all-time highs at 33.82. So nothing's really stopping this right now, even though I don't really feel that the S&P is really justified at these levels. The bottom line is we have to trade what the charts are telling us, not our bias. And the reason why I say I don't feel the S&P is totally justified is that if you were to take out Amazon, Google, Apple, Netflix, Microsoft, if you were to take out the top 5 or 6 companies, then the S&P 500 would be somewhere like around, like mid 2000s. If the S&P 500 was to be only them, then it'd be well above 4,000. So the market really has become, or at least the global, at least the US stock markets have really been centered around, just these few tech companies. So it's not broad based. 2/3 of the companies in the S&P 500 are actually down 20% on the year. So when 2/3 of the companies are down, then it's not broad based. But so that should mean that, hey, we don't have a broad based rally. The market should be higher or should not be this high. But the bottom line is they are. And so we got to trade what the charts are telling us. We can't trade our bias or, where we think the market should be on any sort of rational level. And right now the charts are just super bullish. There's no reason to not be bullish on this right now. So yeah, that's kind of what's going on with that. The interesting one about this though is the NASDAQ, which has been the leader for a long time. It's made all-time highs many weeks ago, and it's just been going gangbusters. And that has actually been a little bit down on the week, and it's going to have its first bearish close in a few weeks, and it's some of its strongest bearish close in terms of losses in a while. I mean, every single intra week was bought. This one wasn't, but bought mid, little rejection the upside. This one's got some weight to it. And if we look at it, we can see, looking at the 4-hour, that's a pretty strong drop off there. So just these kind of large drop offs like that are going to force some portfolio rebalancing. They're going to force some people that were complacent to the upside to look for some downside protection, to unwind some positions. Because when you have such a long, consistent trend, people in funds and traders get more and more levered to the upside. So, the gear becomes bigger. That's what leverage is. Leverage is like a gear. And so the more levered you are, the bigger the gear. And when that gear is really wound up, then any sort of downside shock will force kind of a quick adjustment of positions. And it also increases risk premium across the board. So it's got some work cut out for this. It almost kind of looks like the Tesla chart, which we'll get in shortly. But, what's interesting is that tech has been the leader and now it's the laggard. So that could be a sign of things to come when your leading index has been losing ground. That's not the best sign. And if it was to start losing further ground, if it was to lose 10.5 and then the spike low here, 10.3, then that could start to pull the other indices with them. That could put pressure on them. So that's kind of what I see going on in U.S. markets. Nothing really to comment on Europe, kind of mixed right now, nothing flat, and nothing really on Asia right now. So, but that's the main thing I wanted to talk about in terms of indices. Let's go over some trades that I'm in right now. I am long DKNG. I've been long for quite a while. And we recently sold let's go to this one. So we originally longed at 26, added at like 26, mid 26s again, added at 30, added several ways along the way. And so our net position is right about where we are right now. It was underwater for a little bit. When it got down here, I sold some protection. I sold a covered call. So a covered call it's an option trade basically. And what it is that if I own 1,000 shares on DraftKings, then basically what it works is that I can sell a call. A call is a bullish trade. It's a bullish option trade expecting the prices go up. So if I buy a call, I'm bullish. But if I sell a call, well, then I'm not expecting prices to go above my strike price. So I sold a 40 call when it was down at 30. And I wasn't expecting it to get to 40. It's an August 21st expiry. So if the market gets above 40 by the time it expires, then the person who bought that call can activate it. Normally that if I was in that trade and I'm short the call and the market's above 40, then that would mean that I have to pay out whatever the option price is at the time of expire when they exercise it. But covered call is different. That's the benefit of covered calls. which is that you collect, when you sell a call, you collect the premium. And so while I am long the stock, I can sell a call at 40, collect the premium for that, basically. So I collect an income for selling that option. If the market closes above that, when they exercise it, instead of me having to pay out, I just have to give them 100 shares per option contract. So I don't lose anything. It's actually a win-win for me. If the stock goes up, I win on my stock position. If it goes above 40, well, then I have to give up 100 shares for every option contract I sold. And so since I have the shares to cover the amount of contracts that I sold, I collect the premium while my position was underwater. If the position regains 40, I win on the stock position, and then maybe I lose some shares at the end of it, but I'm still net long my stock position and I collected a premium. So I collected two incomes on the same trade. So that was that's what I'm at on DraftKings. Looking at the chart, and I'll get to comments in just a second here. So let's open up 4 hour. This is a pretty good reversal here. You know, look at this. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. 4 hour candles bullish. That's just a lot of buying. So we had talked about that. We talked about two lines of support. We talked about two zones and then two major points. We said the first point that we think dip buyers will come in is around 30.87. We said the second point, which is the stronger of the two, would be this point, 27.61. And what happened? Market went right to 27.61, found a large amount of dip buyers. And the thing about this is that if you look at this rally, it never got above this little tight corrective structure. And the tight corrective structure is at the bottom of the move, which generally indicates more bearish price action in stored. So when we bounced, we never got above this, and then massive selling took it lower. Well, they went right to our breakout pullback point, which we decided to add on to our position. And so that has helped boost this. It hasn't helped. Our overall net long position went from 40 to about 36 roughly on that. So we do got some lower shares. We got some shares that are underwater basically. But we've done really well on this one here. And you can tell that the fact that this broke this high and this high is saying, look, this is a serious amount of buying. Buyers are willing to say, hey, when we get to 27.80, 27.50, that's where we feel the stock is undervalued. And they came in with size and they came in with force. So, you know, if they didn't, they wouldn't have cleared this here because sellers were looking to defend this here and defend this here. They defended it again this time here and sold it off. So clearly there's some sellers that were defending it and they cleared that out. So that's just going to add a whole lot of bullish momentum to it. If it by some chance it does get back to 27.60, 27.50, I'll just add more onto my position. And, you know, because I feel like this is, if they've defended this once, they're going to defend it again. I don't think we're going to make it that far down. I think if anything, it drifts maybe back at best to 30.88, and then I'll look to get long again on this one here. So that's kind of what's going on with DraftKings. I am long ARNC. We bought yesterday at 1660. That was because of this major kind of support. And so we bought on the break of that. So we are long on ARNC. This is like a medium-term long position on this one here. We're going to target 1865 and 1947. And if we can clear that, then we'll start going for 2190 and 2289. So that's where we are on that one there. We also have longs on GDX. We have quite a few longs on GDX right now. We've already had long position for a while. We added more at 3860. It's right now 3834. This overall structure to me is still very bullish. So you got a corrective pullback with just a brief kind of liquidating of positions, and then buyers came back in force. It's been mostly holding the weekly VWAP. So I might add on to my position there, but I'll definitely add on to my position here. As long as this structure holds, it's still very bullish. It's only if this thing starts to break, then you'll start to see some stops tripped unwinding. Then at that point, I'll probably, you know, do some options to reduce the risk, neutralize some of the risk on that. Maybe go long a put, or buy a call spread, a bear call spread, which will give me it's a credit spread. So that's kind of what I'm thinking on GDX for right now. Sono, we're long on this one here. We bought this late in the session yesterday. Very simple, straightforward structure. First, let's go over the weekly on this one here. Just very strong run off of 8. We have some support which was resistance at 1538 and 1576. And so, oh, I moved that. There we go. So looking at the smaller structures, let me pull up the 4-hour. We got long on the break of this, so we are long right now. I feel like overall the structure is still bullish. It's still building. You can see kind of the breakout pressure on this one here. So I think if it gets back here, I'll still add to my position and then probably stop losses below the very big launch on that one there. And upside targets, long. This is more of a medium term. So I'd like to get past this spike high here, which was right before the coronavirus sell-off. I'd like to get past 1683. It's obviously rejected that intraday or interweek. If we get past that, then I'll look at 17, and then I'd like to make a move up towards 2083. Then I think it's gonna be a little bit lofty, but medium term and long term, I'm bullish on Sonos. Space, this is one I missed yesterday. I'm kind of bummed about this one here. Actually, I might get long pretty soon on this. So this one, this is Virgin Galactic Holdings, and they were bullish on positive news that they had hired an executive out of Disney to kind of start running the company. So it's very, very bullish. Nice positive news catalyst. So the key was clearing 2117 and 2155. And now that it's done that, let's go to 1 hour. So here's the 2117 or 2106 and 2105. And I read a brief thing below it, came back, and I think it hit the intraday VWAP. Yeah, it hit the intraday VWAP. And here's where it was. So it hit the intraday, pulled back, hit the intraday VWAP, and bounced. Got stuck in the resistance, cleared it, and then came back to VWAP and held it. I was looking for a little bit more of a dip on this one here. I was looking for the market to kind of dip back to this 2155, 21 area to get long. But in pre-market session, it just got bought up massively and has gone gangbuster since then. So I'm going to wait for a dip on this one here, mid 22s. I think there's a pretty decent base of support. It's Friday, so I'm not exactly keen on buying breakouts on Friday. I'd rather trade a breakout pullback if possible, but on Fridays, I generally prefer dip trades versus trading breakouts. So, the 5-minute structure is bullish, but considering that we've had such a large run in breakout, I feel like I'd rather wait for a pullback towards this prior resistance there. So I'd like to get long somewhere in here, wait for the market to pull back, wait for the weekly VWAP to catch up, and then we'll consider getting long on this one here. So that's kind of what I'm looking at. You could redraw this line to be more like this and not include the spike highs, and then it kind of feels a little bit cleaner. So somewhere between 2067 and 2155. I may do a starter position at 2225, but I like if the weekly VWAP trails up, then I'll look to add a little more bullishness to it. But yeah, I'd like to wait for a dip on this one here. Even though it is breaking out right now, I'm very tempted to take this trade. I'm very, very tempted to pull the trigger. I'm not a fan of trading breakouts on Fridays. A lot of times they will fade. This one may not, but I'd rather wait for a dip to value in this before getting long. We're getting some questions coming in here. So okay, so let's see here. Scrolling through questions. Okay, Mandeep Singh is saying, Chris, why do theta decay selling a call when you're long shares which don't encounter any theta decay? It's very simple. So when I'm long shares, I only have one way to make money. So at that time when DKNG was, let's go back to this chart. When DKNG was selling off, this is where I sold the call. So it was once it broke this low here, I sold the call. The structure was still bearish, and there wasn't any signs that it was going to stop. And speculating that it would stop here, leading up to that would have been a gamble. This is what my chart was at that time. So what ways can you neutralize some of your risk if you're long shares? Well, you can sell covered calls, which at 40 if it gets above 40, because I have way more shares than I have covered calls on it, if it gets above 40, I can get rid of some shares while lowering my cost basis and reducing the risk. And if it gets above 40, I'm going to still make a lot of money on that. So it's a win-win situation by selling covered calls. I could have sold a bear call spread, but then if you sell a bear call spread, most likely, depending upon the spread and depending upon volatility, since you're selling a spread, even though volatility is high, the bottom line is that my risk would have been slightly more than my reward on this one here. So by selling a covered call, I get a guaranteed return on it with very fixed risk, completely fixed risk on it. So that to me seemed like the better position. I could have gone short a put, but I don't want to be a option buyer when volatility is high because that increases the cost of the premium. So theta decay really wasn't too much of a worry for me because I have, very little downside in selling a covered call. So does that make sense, Mandeep? I keep forgetting there's a 10-15 second delay. So hopefully I answer that question there. Let's see here. Alana Weaver, learning of stocks to watch. Good morning. Good morning to you. Alana, sorry, said everything wrong. Stefano says, some positions currently underwater in DK. May I ask if you're playing long-term positions differently in terms of risk management? Not as much. Yes and no. So yes, I've said from the beginning, I said it when I started very early on, I am very bullish medium and long-term on DraftKings. I've said for me, this is a long-term play. So I want to be exposed to DraftKings stock for the rest of the year as much as possible. I want to keep exposure on it one way or another. If the stock starts to drop, then I could use options. I could use all kinds of things to neutralize the risk, to lower my cost basis, and to build a second income on the stock position while I'm holding it. I can't expect, if I'm going to hold the stock for the rest of the year, I can't expect that the stock is just always going to be a one-way train. There's going to be periods where it has pullbacks, drawdowns. If it's a sideways corrective structure, completely horizontal, then I really don't have to worry too much about neutralizing risk unless I'm top heavy, so if like the structure is, let me get to the drawing tool here. So if the structure is, let me clear out, go to weekly, and then make some white space here. Okay. So if the structure is like, let's say the structure is this impulsive, and then it forms a corrective structure at the top. As long as, and it's doing this, it's kind of inside here. As long as the majority of my positions are not in this upper region, then I'm not top heavy on it. So during the corrective structure, my overall average share price is going to barely be underwater. So there really isn't much to do in terms of neutralizing risk. I could buy some protection, which isn't a bad idea. If the volatility starts to go down, then buying protection is cheap. So that would be the better time to be doing that. So I could buy some protection in case the market does this, then I could buy some protection while we're in it, while volatility is low. The protection will be cheap. And then if the volatility increases, that position will start to make money, not only because of the increase in implied volatility, but also because the downside is manifesting. So the protection will start profiting. So that would be one option if I was top heavy, but I wasn't really top heavy. I was kind of more mid-range, and the structure was more like this. So because the structure was like this, you do have the structure itself is leaning into your risk. It's not going flat against your risk. It's skewing into your risk. So if the structure is skewing into your risk, then you want to start looking at other ways to neutralizing risk, lowering your cost basis, and managing that as much as possible. So that's what I did. And you can do it with covered calls. You can do it with bear call spreads. You wouldn't want to do a delta neutral strategy. You wouldn't want to do like an iron condor or anything like that because the structure is leaning against an iron condor. You could, work with volatility strategies, but you're going from high volatility to medium volatility. So it wasn't enough a change in a volatility for me to want to use volatility strategies and try and collect the difference between implied and realized volatility. So for me, the better play in this case was the covered calls. So as long as the overall structure is in place, then I feel like, I want to maintain exposure to DraftKings. If they had a dividend, then I would feel much better about pullbacks like this, corrective structures that are counter trend. But my feeling is, as long as DraftKings stays above 1826, which is or 18 flat, which is kind of this major resistance and then breakout, then I will continue to maintain exposure. If we get below that, then I will just unwind the position. And hopefully along the way down, I will have neutralized as much of that risk as possible through options. So hopefully that answers your question. Kevin saying, happy birthday, Chris. Thank you. I appreciate it. Good morning to you, CMS. Yeah, let's see here. Okay, so answer that question on Stefano. Do you still have a planned stop loss on it? Yeah, okay. Hopefully I answer your question. Jeremy, good morning to you. Susan Pratt, do you use the VWAP only or do you use EMA lines? I use VWAP for stocks and indices, and I will use EMAs for Forex. Hopefully answer your question. Mandeep saying skew position sizes. Can you be a little more clear on that, what you mean? Are you talking about like doing back spreads or ratios? What are you referring to? If you could be more clear, that'd be helpful. That would be helpful. Okay, Stefan's saying, thanks. It's my understanding that just buying a stock for the long term without matching it with option plays might not be a good idea to manage a portfolio. Am I correct? That depends. You don't have to manage it with option plays. You could, I think option plays are a great way to manage and neutralize risk. They're also a great way to create a second income on the stock. Dividends are a way to create a second income. If the stock itself has a really, really good dividend, then the dividend itself will help to neutralize some of the risk, assuming you have enough shares in that position. And also that your cost basis is relatively, if you have a large position on a stock, you don't want all your cost basis to be on the top end. Then that exposes you to a lot of downside risk. But like this one, if you have exposure along the way, 26, mid 27, 28, 30, that kind of stuff where we had that, then you don't have to have as much management of the position because you still have shares well below the current price that are making you money. So if the stock has a dividend, that's your second income. That'll help neutralize it. But if you're holding a position for, at least a year, which, we're holding this, for the rest of the year. And unless something catastrophic, unless it hits our like catastrophic, the sub 18, we're going to hold DraftKings for the rest of the year. We will maintain exposure to DraftKings. And so as long as it's doing that, then I will use options along the way to manage and neutralize risk as much as possible. Keep in mind, every time I sell a covered call, we sold some covered calls. When we bought it at 26, we had sold 35 covered calls. And the market did get above that. And they were going to expire this August. So the guy who had bought those calls, they must have felt really bullish on it because they didn't exercise them at all, which is, it's not a big deal that they didn't. If they exercised them, I would have just lost some of the shares on the position, which would have been fine. But it's a good thing that they didn't, because once it did this, then I was able to unwind some of those covered calls for a profit. I didn't collect the full premium, but I still was able to unwind them for a profit because they were below 35. So once I saw this, I saw this and I was kind of like, okay, well, I'm going to lose some shares once they exercise it. They must have felt like this thing was going 50 or 60 or the moon. I don't know. Maybe Alpha Centauri. I don't know where they think it was going, but they thought it was going well above this, that they felt like, nah, I don't need to exercise these calls. So we said, no problem. Now that we're below 35, let's unwind some of these. So we unwound all our covered calls on that one there. and we made a profit on the cover call. So we got a second income on it. And because the stock was losing ground while some of our stock position underlying was negative, we were unwinding and reducing some of that negative losses on it through the options. So then when it got to, 28, we sold another cover call. So we again reduced the shares by almost another dollar. So basically we lowered our overall position by $1. So if you are going to be holding a stock medium long term, then you definitely want to, if you can, skillfully employ options to manage, neutralize risk, and provide a second income. So hopefully answers your question. Okay, I haven't seen another question from Mandeep, so I feel like I think I've answered all that. Okay, great. So that covers DraftKings. I've covered Sona. I've covered GDX. How's Space doing? Yeah, see, don't buy the breakouts on Fridays. Okay, anything else I want to cover in terms of potential positions that I'm looking at? Any others that I'm looking at? I think that's pretty much it. I have some potential things I'm looking at. Spotify, Overstock. I like Overstock as a stock. It's a great stock. Got good volatility, good liquidity moves. But I'm trying to think if there's anything else on my horizon. Not really. I already have pretty good gold exposure right now, so I feel like I don't want to add any gold exposure. I'm long GDX, Gold Miners Index. I am long IAG, which is a gold miner stock. And I had a GLD option, which is the gold ETF option, but I just unwound that for a profit. So I'm trying to think if there's anything else. Yeah, I don't have any other gold exposure right now. I don't want to add any other gold exposure. I am open to adding exposure to XME, which is a mining and metals ETF. I think this is got higher prices in store for it. We were kind of in a corrective structure inside this 2169 to kind of 20 flat range, and we've now broken out of it. So I'm going to watch for a pullback. I'd like to get in at 2177. We bought XME back in May, and we bought it at 2030. We added at 2131. I think we had a third position. We closed out literally like 8 or 10 cents from the top. We just got, I wouldn't say lucky, but we had really good timing on that. We had planned it ahead of time. Hey, once we get up here, we think this is going to run into some resistance here because you got all this here. So we got in pretty much a few cents from the top. We've been waiting for this position to kind of show itself, because while it was stuck in this corrective structure at the bottom, there was some potential that it could unwind some of that. Now that it's lifted that, then I'd like to be a buyer on a pullback to 2178. Take profit in this upper range here, and ideally get a break of that, and then start moving into the 25 and 28.50 range here, because that would open up a lot more upside. It needs to clear this though. It does also need to clear 2480, because you have some resistance here, here, and here. But once you get above 25, there it's kind of thin, like 25.20. Once you get above that, then really you don't have a whole lot until mid 26s, and then it opens up 27.50 and 28.44. So that's a way to add exposure to gold, but while being a little more diversified, because the S&P Metals and Mining is not just gold. That is the wrong one. Where is the more financials, more technicals? Okay. I have to go to Bloomberg to get that. So let's go to Bloomberg super quick and I'll show you. So it's a little more diversified. It's a way to take a position on gold, but still have exposure to other metals and mining. And so it's a nice way. Hey, now I had that. There we go. So, and they actually have a dividend, which is actually not bad. So mining company, mining core mining is actually a really good stock, Alcoa, which we've talked about recently. So it's a lot of stocks, but you also get exposure to gold. So I like it because I'm bullish on metals. I'm bullish on mining. I'm bullish on gold for a while. I think while gold probably needs a little bit of unwinding and a pullback, it's had an incredibly strong run recently. I think it's going to tag and break what was the all-time highs, 1900, 1940 or something like that back in 2011. So I think it's going to break. I think it's going to break that this year. I think we're going to see new all-time highs. I think we're going to see 2K this year. That's my thing. But I think it feels a little tired or exhausted. And so it feels like it kind of needs to unwind just a little bit. It's just been such an impressive run. So I'd like to kind of see a little bit of a pullback and then launch higher, find a good floor support and then launch higher. And, 165 is not a bad area. In fact, I should probably put an alarm in there. The good thing is that volume's been steady throughout this whole process as it's been rising. So it's not like a fading volume, it's been holding. So there's still consistent buying pressure. It's not overly exhausted, but it does feel, it doesn't have the same oomph, but it still feels, overall bullish. Nice corrective structure right here. There you go. So if you wanted to day trade, you could day trade, that short-term trade that, buy the bottom, sell the top with exposure more to the upside than the downside. Okay, so Wilson Chong, what's the best strategy to trade indices? That depends on how you want to trade them. Do you want to trade them short term? Do you want to trade them, scalping? Do you want to trade them medium term, long term? I don't think there's like a best strategy to trade indices. I think there are multiple strategies to trade indices. My preferred strategies, the way I like to trade indices, is price action and options in Ichimoku. That's how I like to approach trading indices. Do I do day trading on indices? Yeah, not as much though. I do day trading on indices, but not as much. I would rather day trade small and mid cap stocks, maybe some very on the lower end of the large cap stocks. My sweet spot tends to be around $6, $7, $8 all the way up to about 60. That's kind of my sweet spot. Once I get above that, I feel like my buying power goes down just a little bit. And believe it or not, on some of those large caps, the spread is actually not that great. Like Spotify, I like it as a stock. I think the price action is great. I'm bullish on it medium and long term, and I'd like to start scaling an exposure to it. The spreads are kind of nasty, 50 cents. Sometimes you see 70 cents. That's a big spread. Whereas, the small and mid caps, the $8 to $40, $50 range, I can get spreads 1, 2, 3 cents. So, it's much easier for me to get in and out of that without having much of a cost basis or a slippage or anything. There's the liquidity is there. Obviously, there's going to be liquidity in indices, but yeah. In terms of indices, though, the majority of my trading indices is more short-term swing. Maybe hold it for 1 to 3 days. Maybe hold it for a little bit longer, but depends on the index. Right now, I'm not totally sold on holding indices long-term because I think there's too many bugaboos and specters in the market with coronavirus, and stimulus packages that may or may not happen. You got trade deals with China that are breaking down. You got tensions between the US and China, potential military conflicts. So I would rather, it seems like you'd want to be more exposed to indices because you diversify the risk, but I also feel like the indices are a little overly complacent right now. And so I don't want to have too much exposure to them. I like to be in and out because I feel like anytime trades get really crowded and indices are really crowded, Tesla is really crowded. When you have that kind of complacency, I just realized I'm showing my taskbar the whole time. So let me move that out. It makes for a horrible picture. Okay. When you have kind of overcrowded positions and people are really levered, which they are on the S&P 500, which they are on the NASDAQ, which they are in Tesla and things like that, then volatility is only one move away. Like heavy volatility is only one move away. All it takes is one big drop. And because everybody's so levered, all of a sudden they're like, wait a minute, we're not used to the market moving like this. They're going to start unwinding positions. Then people need to start selling positions to reduce risk, neutralize risk. They're buying downside protection, which only exacerbates it. And then on top of it, because they're so levered, they might need to sell certain positions or other positions just to cover the losses on that position. So when people are really levered into certain positions, I don't want to have much exposure in time to them. So I would rather be exposed to, individual stocks in that case, which I feel like people are going to be less levered into. Not many people are really levered into DraftKings right now, but people are really levered into Tesla. So speaking of Tesla, so hopefully it answers your question. It depends, Wilson, on whether you're short-term, swing-term, long-term on it. Am I a scalper at all? Not really. I've played with it. I feel like if I really wanted to focus on it, I could be a scalper, but I don't feel like it naturally aligns with my style. I feel like scalping I don't have anything against scalping. I think it's totally fine. I know some really good scalpers. The student of mine who's now starting his own prop firm, he's a scalper. He will trade 100 times a day, 100 times a day. And he's just trading off the 1 minute chart. I have no problem with scalping. I'm not going to badmouth it. I'm not going to say, oh, it's BS. Oh, it's, strategy. You shouldn't do it. Oh, you should stay away from it. No, it's a very unique skill. And if you can do it and it naturally aligns with your mindset, the way you want to trade and just the way you think, then you should do it. I totally support it whatsoever. I have nothing bad to say about it. It's just that for me, I feel like I'm on too much coffee if I'm scalping. And I don't know if I could be scalping long-term. Like, I don't think I could be scalping through my 50s or my 60s, but I do feel like I could short-term day trade, short-term swing trade in my 50s and even in my 60s. I feel like I could do that. But I don't feel like I could do that with scalping. I think it's just too fast. I feel like I might deteriorate my health if I were to do that. I've never met a scalper who's made it through their 50s or 60s. I've never met a scalper that can do that. So, maybe it would be a good thing because short term, I could build up the account super, super fast by scalping, but then I would need to transition into something else. And so I would rather just transition into that now and go deeper and deeper and deeper into that skill set and use that for the next 5, 10, 15 years versus do something for a few years and then exhaust myself and then feel like, okay, I got to do something else. So yeah. So it's not my jam, but I totally support people who want to do it. Yeah. Good question. So Tesla, just to give you an idea of how when people get complacent on really overcrowded trades, that things change drastically. So, for example, the S&P this week, let's go to the ES 500, had a little bit of a scare on this day. So, it was a pretty big drop. I mean, you're talking a 2-hour drop that had erased, what is that? 60, 70% of all the gains over the last several days. From the 6th to the 13th, 2 hours had erased 60, 70% of all the gains from the 6th to the 13th. So that's a lot to lose in 2 hours. They call that in the markets, they call that taking the stairs up and the lift down or the elevator down. And the thing about it is that if you had bought a put, which is a bearish option on the S&P 500, because the market was complacent and the volatility was low, the puts were cheap. Downside protection was cheap. So you could have bought a put for $4.90 times 100 contracts. So $490 per put. The next day, once we had that first hour sell-off, that same put at the same strike price and same expiry was now $11.90. So $1,190. So 1 hour changed everything. And when you see situations like that, where just a brief downside move increases volatility and premiums massively, that tells you that the market is not prepared for that scenario because they're willing to pay over double the same trade 1 hour later than they were an hour before. Why would somebody pay double on their car insurance? Well, if they were really worried, or fire insurance on their house, if they were really worried there was a fire that was going to burn their house down, you're going to probably pay that extra insurance. That's what it is to buy downside protection on an index. And so when you see that, that tells you that the market is really levered to the upside, that they're willing to spend 100% more for protection one day than they were the next. So Tesla to me seems like one of those trades. I feel like Tesla is a very, very crowded trade, and understandably so. The thing went from about 1,000 June 30th to 1,800 by July 13th. In 13 days, it gained 80%. And this is a large cap stock. That almost never happens. Like rarely ever will you see Amazon or Microsoft or Google or anything like that gain 80% in 13 days. It's unheard of. So to me, Tesla has become kind of a bubble. And keep in mind, Tesla is only 0.8% of the US or the auto market as a whole globally. And yet it's added the equivalent of its market cap 8 Fords to itself, or one whole Toyota. It's only 0.8% of the market, and yet it's like bigger than the entire US S&P auto index. So does that seem like, a bubble to you? I don't know if it does to you, but it does to me. So it's a very, very crowded trade. I mean, 1,000 to 1,430 in a period of 6 days. And then from July 12th, 10th to the 13th in 3 days, it gains another $400, $300 roughly, $350. That's insane. So when you look at this on a weekly chart, that's, parabolic, massive sell-off, huge parabolic move with a very large extension, very large range bars on the weekly chart. And when you have very large, like after a parabolic move, when you have very large range bars like that, everybody's all in. You don't get bars like that unless everybody's all in. And the fact that this has sold off a good portion of its gains, I mean, it's going to be the first bearish close since the 22nd of June. And this is not a small bearish close. This is a big bearish close. The high was 1794, almost 1800. And here we are at 1500. You are the cost of buying downside protection right now are very expensive compared to what it was before. And there's a lot of people that were long that are sitting there going, oh shit, if this unwinds, I'm in trouble. There's a lot of people that were long at 1,500 and 1,540 and 1,600 and 1,700. And probably there's people that were long at 1,750. Let's see what it's looking like on. So RobinTrack.net tells us how many people are long Tesla. Yeah. Okay. So the highest it's ever been. We have 480,000 people on Robinhood that are long Tesla right now. This is one of the few stocks they've been tracking well. Normally Robinhood traders are not tracking stocks well. Normally retail traders are not calling good shots on stocks, but this is one of those stocks they're tracking well. As it's been gaining, they've been buying. But look at how many people are like started to lever, in the last, like once the stock got to 1,200, huge gain, in one day you had 340,000. The next day you had 352,000. So that's a big jump. 10,000 people in a day. A few days later, you're at 374. A few days later, you're at 400. So 100,000 people have added longs in like a few days. And then how many people are underwater right now? The stock price is right here. So literally from here, 408 to 40, you got 80,000 people that are underwater right now on Tesla. 80,000 traders that are underwater. Those traders right now might be panicking because Robinhood traders most likely don't have a big account. Even if they bought one share, like if they can only afford one share, that's a small account. They're down $300 on their $1,000 or $2,000 account. That's a lot to be underwater right now. So, I feel like, I would not want to be buying shares on Tesla right now. If anything, I would be looking at downside plays on this. So yeah, I think Tesla's in trouble. I think it's in trouble. You kind of got your clear line in the sands. This is your 1428, 1429 is the relative floor right now. You may have a little bit at 1340. And then you have a ceiling, you know, it's not even hitting the weekly 20 MA. It gets sold off each time. It's getting further and further away from it. And if you can see, the bounces are getting weaker, decent, weaker. This is an okay bounce, but then this is a very weak bounce. In fact, yeah, this is kind of a weak bounce. I mean, it could be rolling over. If I was aggressive, I would take a short option position or a short stock position on this if I was aggressive, but I don't feel like being aggressive right now. I'd like to see how this thing closes. If it, you know, starts to drift lower here, then I think the probability starts skewing towards a downside break. We're not there yet. Ideally, I'd like to get a rip a little bit higher and then sell the option, because then the option will be cheaper, or it'll be easier for me to get the shares. But yeah. Okay, so awesome analysis on Tesla bubble not able to sustain on fib retracement. I don't focus on fibs, so it doesn't really matter to me. But yeah, sure. If that's your fine. Where did I find that information? I'm assuming you're talking about Robinhood. It's called robintrack.net. And you can go to their home and it explains it to you. But the thing you want is the leaderboard. The leaderboard will not show up. Oh, I wonder for my browser. Okay, so you got to go to, so the leaderboard doesn't show up based on my browser, but okay. So I use Opera GX. It's a gaming browser. It's really powerful, but for some apps it doesn't work. So it should work on any other browser. So if you go to the leaderboard, it'll tell you what are the top, mostly wide held stocks by Robinhood traders. And so you can just, if you want an individual stock, you search it and it will tell you Tesla is the 10th most widely held stock by Robinhood traders. So yeah, hopefully that gives you some good information. Okay, Stefano's saying, good news, TradingView added average volume back in the stats right now. Really? Enough people protested. That was awesome. We were so pissed because they changed this panel here, and it used to have volume in comparison to average daily volume, which is important because it will tell us if the average daily volume is 1 million shares and there's 5 million shares being traded in the first hour trading, that tells you the stock's in play. That tells you a lot of people are trading that stock. So they had taken it out, and then a bunch of our members protested, and so it looks like they've listened, which is nice job, team. Good job on that. So it's good that they have that back. That was smart of them to do that. That was very smart. They needed to do that. Okay. Yeah, don't buy the breakouts on Fridays. Okay. So that's where we are on what's happening in the ES. Okay, it's mild. I'm glad they put that back. That was a good move by them. It's actually a better place than it used to be. Yeah. Do I need to refresh? Oh, because S&P. Yeah. There it is. Yeah, it's so much easier to see now. You can see it right off the bat. Volume, average volume. Super huge. Just to give you an idea. Okay, so here's a stock that's very actively traded. The average volume for space is 23 million shares over a 10-day rolling period. The average volume, or the volume that's being traded right now, is 20 million. So that tells us that there's a lot of people participating. That's very important for us to know. So yes. Okay. So we've covered, what time is it? Okay, we got 15 minutes because I got a member webinar after this. So let's see here. So yeah, about 15 minutes. Sasha, if you will remind me in 15 minutes, I hope you're listening right now. If you will come in on the text chat and say, hey, it's time, then that would be great. So remind me in 15 minutes. God, I really feel like shorting Tesla, like getting aggressive on it. I really feel like that. Okay, I'll check the options market once this is done, but this looks like it's winding down. I mean, worst case scenario, I might be able to do like a bear put spread, and yeah, like a tight bear put spread or something like that. Okay, so the next 15 minutes, if you have currencies, if you have stocks that you're in trades right now, or you like analysis on currency or stock pair index, doesn't matter when it, just tell me the symbol, time frame, and if you're long or short on the currency, and then 1 sentence brief analysis. Okay, good. Sasha is listening. All right. So let's see here. Nobody, no takers. I forget there's the 10-15 second delay. Stocks, currencies, doesn't matter. Index, I don't care I don't care which one. Nobody has a currency pair of stock they want. Biting my hands on mRNA breaking out nicely. Wanted to enter VWAP retest, but don't trust breakouts on Fridays as well. Well, don't worry about it. There's no point in biting your hands. What's and volume? Look at volume. 11 million and average volume is 27. So yeah, I wouldn't worry about this too much. I don't feel I mean, it's a good structure, but you're buying right ahead of 88 resistance. You got some thick resistance. So, it's clearly shown a propensity to pull back to the weekly VWAP. So why not just wait for the next pullback to weekly VWAP? If it really is going to hold, it's a pretty clean, it's pretty clean resistance, breaks, comes back, building. It had an after hours breakout and then sold all that in the market. So yeah, it doesn't seem like it's a big deal. It seems like you're going to get another shot. So Ari, if you want analysis, you got to do currency pair, time frame, whether you're long or short, and 1 sentence description of your analysis. Trading View average volume, is that a paid feature? I don't know. I've only had the paid version, so it's hard for me to know. I have whatever the top premium or pro or whatever that is. That's what I have. I have the highest subscription yearly thing possible. Let's see here. So do you trade in every market? Pretty much. It's hard for me to get exposure to stocks outside the US and Canada, but I can still trade stocks via ETFs in other markets. If I move out of the US, move someplace in Europe or something like that, and I can open a brokerage account with Saxo, then I can trade every single market on the planet because they have every single market. So in terms of multi-asset class, Saxo is the pinnacle. They are it. You can do options with them. You can even do Forex options, which is hard to get these days. So you can do stocks, commodities, indices. You can trade Russian stocks, Australian stocks, Canadian stocks, Taiwanese index, everything across the board is an awesome. I think they have like 70 or 80,000 instruments you can trade. It's insane. So, I kind of am ruining the day that I can get back to that I wasn't able to trade with Saxo anymore because I moved back to the US, and then I'm kind of, looking forward to getting back with them. But my brokerage right now, Thinkorswim, TD Ameritrade, I can get all the US stocks. I can get Canadian stocks. I can get loads of ETFs all over the planet. So it still gives me exposure to that. Awesome options platform. I really like that. That was actually one of the big things, was that I needed a good options platform, and they have it. So yes. Okay. So pretty much I trade every market, and right now I have exposure to a lot of US stuff, options, commodities, some indices. I got a lot of exposure right now internationally. Okay, Beishan wants to look at, he wants to look at a currency pair. So let's go to the currency pair charts. So it switches from VWAP to EMA. You want to look at 4-hour EUR USD. Okay. Euro dollar is looking bullish, and US dollar is looking bearish, in my opinion. Bring up pullback to 4-hour time frame. I kind of see what you're saying. So I think you're looking at this structure. If you got this breakout pullback of this, that's a great long. Obviously, you're at the top of the structure, so probably unwind, a good portion of your position. If you believe it's going to break out this weekend or early next, then keep a small amount of your position. I was going to say shares, but keep a small amount, a few lots You know, if you have a few standard lots left, then keep a few of those. But yeah, if you got this breakout pullback, that's a really good trade. If you're thinking that, hey, I want to take a breakout pullback once it clears this, I'd probably want to see a little more building. Obviously, being a Friday, I wouldn't totally trust it. So Sunday, I'd want, you know, if ideal would be you see like a mild pullback. So let me get the drawing tool. Like ideal would be you get this and then the pullback is very weak, you know, and it's just pressing. That would be a really good setup for a breakout. So right now, Eurodollar is looking bullish though. I feel constructive on Eurodollar right now. Yeah, it's very constructive. This is very, very constructive. So yeah, very, very nice chart right now. Ari, do you have a time frame? So it's currency pair, time frame, long or short, one sentence analysis. I got 10 minutes. Kind of OT. Made me curious about Opera GX browser. I'm using Google Chrome, works great with all my platforms, but it's quite heavy. I like, so Sasha introduced me to it. It's a gaming platform browser. You can control the resources, like you can control memory usage, you can control CPU usage. Like to me, that's awesome. Plus they also, because it's gaming, they focus on privacy. So you can access a VPN directly through it if you want to, which to me is awesome. And there's just so much customization and flexibility to it. So the Opera GX browser, it's I like it. I would never want to use Chrome. I only use Chrome if I absolutely have to, but I'm a big privacy advocate. You know, I feel like I don't want tracking my data, storing my data, that kind of stuff. That's my business. So that's why I try not to use the main browsers. You know, before Opera GX, I was using Clicks, which was based out of Munich, a privacy browser. I believe browsers today need to be privacy based. I think they need to respect people's privacy. People want that. So yeah, it's been great for trading. I mean, I'm not trading off my browser. I'm trading off a desktop platform, so it's not really an issue for trading. But yeah, it'd be interesting. So, but for charts, it's been awesome. It's fast. It's just a fun browser. Okay, Ari has come alive. So pound Aussie. Weekly chart. Okay. Weekly long near trend line. Not sure which trend line. A support line. Short term, this feels heavy to me. Why does it feel heavy? Well, first off, it's had one weekly close, 2 weekly closes above the 20 EMA since April this year. It's been rejected by the 20 EMA pretty much at every point. Yeah, you had one, you know, this brief break above it, but then it got immediately back below it. So the sellers are saying, you do have a line in the sand here, which is a short-term support, but if the next bounce off of this does not get to here, like if the next bounce, if the next bounce does not make it to here, but it only gets like here, then the selling pressure is continuing on it. It's going to need to get to here to say, hey, some of the selling pressure is reduced. And what it needs to do is, let's get the eraser. What it needs to do is not only break this, it needs to get like up to here, because there are some people who are short here and short at the EMA, and they will get stopped out if it makes it back up to here. That doesn't mean that it's all of a sudden bullish. It just means that now you're in this structure. And if it only gets to this lower line, then you're in this structure, which is still overall bearish pressure. Corrective structure at the bottom of a trend is still bearish. The probabilities are still bearish. So this thing, in my opinion, this is just my opinion, needs work to establish that there is some strength in the market. It needs to get back up here, and ideally it does it impulsively. But if the moves get weak, then it's leaning towards a breakout, and then you got, let's take a look at where the next layer of support would be. You got some support like down here. So right now we're at 78, so 77.38. And then you got some decent at 75.90. I personally wouldn't consider long until we get to this lower zone here. And I would still want to see something in the price action. I would want to see something in the price action. Right now, I'm not seeing like I see very, very little stuff in the price section that is saying to me, hey, there are elements to be long. The majority of elements that I'm seeing are leaning towards the downside. So that's kind of what I'm seeing. Uses less than 50% memory compared to Chrome. That's good to hear. Jim Rogers used to quote that a stock can go higher or lower than expected. Yeah, for sure. But what is that? I mean, that's okay. I totally respect Jim Rogers. Like, to Jim Rogers, badass. He's awesome. He is a long-term macro guy, basically. And he admits his timing is not his skill set. But what does that mean, and how does that apply to us traders? Okay, a stock can go higher or lower than expected for sure. Any instrument can do that, but I don't know of any instrument that cannot do that. The real question for us is not these great quotes, but the real question is, how do we apply that to trading? How can we use that for us as traders? That's the real key. So total homage and respect for Jim Rogers. I have nothing but respect for him. And he also seems like a pretty cool guy. Like, some of the investment managers out there that are really big managers, they don't seem like nice people at all. They seem like douches. I hate to say it, but that's just my opinion. But Jim Rogers seems like a pretty laid back guy, pretty down to earth. Just seems like a good guy. Now, don't do anything stupid, Jim, because you're gonna make me look stupid. But Stanley Druckenmiller is another one too. So yeah. Okay. All right. How are we doing on time? We are. I should probably wrap it up. Rapid fire. You got 15, 20 seconds. If you got an instrument, time frame, long or short analysis, and then I'll wrap it up. So this will be the last one if you can get it done. I hate biting my thumb on camera, but I got this like total hangnail skin thing going on right now. Like I totally cut it, so I'm trying to smooth it out. Old bad habit. Okay, counting down. If nobody has one in 20 seconds, we will wrap it up. 3 minutes. Thanks for the reminder. That's awesome. Okay, doesn't look like anybody has anything. All right. Thanks for coming out to the public YouTube session. This was good. Enjoyed doing it. It's kind of a surprise thing. So I hope you guys learned something from it. I hope I have expanded your ideas on something. I hope I've given you some trade ideas. And I hope I've given you an idea of how I analyze the price action, how I trade, how I do things. Yogendra, you have to. You had to. All right. We'll do it. We'll do it. Nifty 50. It's such a good name. It's a really good name. Nifty 50 has been one of the stronger major indexes out of all this. You didn't give me a time frame though. Do I ever use Tor browser? Nah, not my jam. Time frame. Yogendra, come on. Clock's ticking, buddy. Clock is ticking, my friend. How did you not know the rule? You know the rule. You know the rule. Instrument, time frame. All right, I'm just gonna go with weekly. I'm going weekly. Sorry if your time frame comes in. Still strong. Let's see. I want to go 4 hour. 4 hour gives me. That's a pretty good. It's a pretty good chart. It's recently gotten very clean. That's a nice breakout. So 10.548 is your short-term support. Weekly on that. You missed the boat, buddy. You missed the boat. You got a nice corrective structure here to work with. It's closing on a strong note. I would want to wait. I wouldn't want to buy it if it's still, I don't know if it's still open at this point. Probably not. But I like this corrective structure. If it floats back down here, I mean, this is really strong 12 hours of buying. But if it does float, I wouldn't mind getting long between on the high end 16 10 649 and on the low end 10 563, so about 100-point range. But your upside, you'd have 200. If you get on the high point, you'd have about 200 plus upside and about 110 on the downside. So that's not bad. Ideally, you can get a little bit lower, 10.6. If you can get to high, if you can get to 10.563, that would be a really sweet entry. You should play this corrective structure until it breaks, but it looks like still bullish. I don't see anything in this that would make me feel like I want to be bearish. I don't see anything. So play the corrective structure until it breaks. And then if it breaks, look to breakout pullback on that where anything. Let's go to weekly for. God, Nifty's such a good index. It's such a good market. I have often thought about creating a prop firm in India just for that, just because the index is so good. You do got some resistance here because you got this kind of structure here. After that, then I think you're probably headed to 11,103. So definitely some top side. If it can get past 11,2, 11,175, 11,2, then it really opens up a move for here. It just opens up a lot of top side. So this is going to be the big one, is getting past 11.1, 11.1.5, 11.2. Once you get past that, then wow, looks like you got 600-700 points, 500-600 points to the upside. That is really nice. It's just been one of the stronger indices in terms of recovering. It's not like the NASDAQ, but for a country's index, it's just done really well. And it's been, in my opinion, a little more consistent than the S&P 500. The S&P 500, consolidated a lot longer, wasn't as consistent. This has just been much more consistent. So yeah, hard not to be bullish on this one here. Trade that corrective structure and then watch. It'll get top heavy around 11.1. But if it clears that, then you got a lot of upside to work with there. That's a good chart. Okay, cool. That was a good way to end. So very nice session with y'all. I will see you guys Tuesday for the pre-market analysis for the US market open. Stock traders, I won't be here on Monday. I'll be, busy for my vacation or my birthday. So I'll be gone this Monday, but yeah. Second Skies members, we're going to do a live webinar right now on, in our private members area. So stay tuned for that. I will see you all then. Other than that, have a great weekend. Be well, take care, be safe, be smart, be positive out there. It's been a great trading week, great trading month. And, you should be finding opportunities. If not every day, you should be finding opportunities every single week. There's just a lot of trade opportunities in the markets right now. This is a great time to be trading. It's like I've been trading for 20 years. This is one of the best markets I've seen. This is probably there's 4 or 5 times where the market was just this good, this hot. This is a great time to be taking advantage of it. You should be not only making money, but a lot of money right now. You should be. This is just the time. So really, take advantage of this here. So thanks for the happy birthday wishes. I appreciate it. Have a great weekend, everybody. And Second Skies members, I'll see you in the private member webinar very soon. Take care, everyone.